Hi traders, today we're going to have a look at how you increase your target while decreasing your risk. You can use this in conjunction with the previous two calculators on the previous two videos and it should all start to come together for you. But before we get into it, we've got a few official things we need to do first. The information presented in this video is for general information purposes only. Your personal objectives or financial situation or needs have not been taken into consideration. Accordingly, you should consider how appropriate the information is for your own personal objectives, financial situation and needs before incorporating it into your trading plan. By assessing this video, you're deemed to have read and understood this disclaimer. If you need a little bit more time, push pause on your video. Remember, past performance of this product should not be taken as an indication of future performance. Caution should be exercised in assessing past performance. This product, like all other financial products, is subject to market forces and unpredictable events that may adversely affect future performance. Remember, there's a risk of gaining money every time you take a trade, but there's also a risk of losing money every time you take a trade. We are trading futures utilizing margin. Margin is defined as the trading of securities with borrowed money from a broker. This has the effect of allowing you to trade a larger position in the market than you would otherwise trade based on your account balance. This has the potential effect of magnifying any profit you make from the trade, as well as the potential effect of magnifying any loss you make on the trade. This is why the term high level of risk is used to describe futures trading. A degree of leverage can work against you as well as for you. Before deciding to invest in any futures trading products, you should carefully consider your investment objectives, level of experience and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all risks associated with futures trading and seek advice from an independent financial advisor if you have any doubts. Okay traders, let's get into the charts. This is the S&P 500. You can see the times down the bottom here just after the US Open. So the first thing I do is go back a little bit further in the chart and draw in my stair step, because it's important that we know what the market's been up to and see what patterns are actually starting to form. Now for those of you who are wondering how I'm doing that so quickly, if we just have a look up here, I'm using the line command. There's three ways you can do that. You can either just come up here each time, click the line. You can get it to stay in drawing mode. I find that inconvenient when I'm trying to trade at the same time. Or you can hit F2, or you can do what I'm doing. I have a mouse that has multiple buttons, so all I have to do is push a button and it gives me a line just like so. Okay, so now if we just go back and have a look, we've got 2 minutes to go on this candle that's forming here. It's looking quite good. If we take a look at this candle here, we can see we've actually had a reversal and a bias switch close on the same candle. Carry on down, we've pushed back, we've now got a continuation close further down here, and the market's carried on all the way down, and now we've had 3 candles in a row fail to push right to the tick any further. So one of the first things we've pulled a long way away from the MDI as well, is we're going to be starting to look for a setup for a reversal. Notice also I've left the brick walls off because I want to put a lot of drawing objects on the screen and I just want it to stay clear for you. So let's have a look and see what we're looking for here. In a minute and a half, we're looking for something to close, and we want it to close and give us a reversal pattern long. There goes our breach point. Got our stop loss down at our last seller failure point, which is there, and if we drag that down, whoops, if we draw the right line, drag that down, that's where our stop loss will be. So I'm just going to do this trade as we normally would, just waiting for the candle to close. I've got a 8 target here. Looking at the PVI is around 9, so I'd be looking for a target of around 8 off this one. So let's just have a look at that and go up here. Oops. Put an order on the screen, and we've got 40 seconds to wait now. And then what we want to do is drop the order as soon as the market closes, but we have to wait another 30 seconds. Looks fairly certain that it's going to close above the breach here. Seconds. Okay, so we're in at the close of the candle and we've got our target of 8. Now the next thing we have to do, of course, is put our stop loss in the right place. I'll get rid of that line, and the stop loss goes there, 2 ticks underneath the last seller failure point. So this is just a very basic 101 trade. Doesn't get any easier than this. Because we're in live market replay, we can actually speed this up. So what we'll do is we'll speed it through to its conclusion, and then we'll cross over into our calculator so that we can take a look and see how this trade actually stacks up on the calculator. There we go, we've just gone through to the completion of the trade. So what we'll do now is we'll actually just measure these so that you can see on the screen exactly what they are. So the way we measure in NinjaTrader, we go up to our drawing and we can pick on ruler, and you can see where the entry was and where the exit was, and that tells us that it was 2 points. We know that on the S&P 500, 2 points is 8 ticks. There's 4 ticks and a point. So let's measure our stop loss as well. The last buyer failure point was down there. Now that gives us 3 4s are 12 plus 2 is 14, but remember our stop loss is 2 ticks under that. So we've gone in with a 16 tick stop loss and an 8 tick target. So let's stop now, go back to the calculator, and we'll have a look and see what that does. So here we are on our trading risk profit reward calculator. If we just go up to the top here, we can select the market we're trading, which is the S&P 500. Now we want to come down. Remember, we had a target of 8 and we had a stop loss of 16. So if we just scroll that up a little bit so that we can see, if we bring our slider back, we need to be trading at around 67% on that trade just to be able to break even. To make a reasonable profit, we're probably going to be wanting to trade at least 75%. Means if we took 25 of those trades with a stop loss of 16 and an average target of 8 on one contract, we'd expect to make 875 New Zealand dollars profit by the end of the month. If you're trading better, say 80%, then the profit will be more, and obviously if you increase the number of contracts, that will increase with it. However, if you're only trading down at 60%, then you'll be losing money. This is why it's so important to get your 100 trades done, get them documented so you know exactly how you're trading. So now let's go back to the chart and trade that again, only this time we're going to change the way that we use our target and our entry and our stop loss. Now back in the charts, we'll look at that trade again, just putting the stair step in. You can see it's the same trade with the same breach point. Now this time I'm going to do it a little differently. I want to be able to sneak a bit on the entry, so I want to go for a bigger target. So we're going to go, we'll increase it out to 10, and instead of going on the top, which we normally do with a buy stop limit order, I'm actually going to put my order underneath and we use a buy limit order instead. This means that the market has to actually pull down in that direction and hit it. The other market order that we were using, the market actually has to come through and hit it going vertically. So what I'm going to do now is I'm going to be looking to try and get in, and I want to get in 3 ticks lower than the close. So if it closes around there, and there it is there, so I'm going to put my order on the screen there. You can see it closed at 0.75, and I'm just going to wait and see if it comes back and hits me. One of the things that you'll notice, and you'll notice it up here as well, we had our bias switch reversal here. It's retraced back 4 ticks. We've got our continuation here, it's retraced back 4 ticks. So this one here, I'm going to try for a 3 tick retrace. Now when you're doing this, of course, it's very market specific, and it's also very time specific. So if you're trading the open, which we are now, and you've got a higher PVI than what you'd have in the close of the ES, then you may not be going for 3, you may be going for 2. But this is where your own testing comes to be very important, so that you know that this trading strategy that you've got, that you're likely to get hit. Now you can see there we're touching the order now. You will get missed on some of these trades as well. So there will be times where it just won't stop, it won't pull back, and it will just smoke through. So that's just part of trading. If you want to be able to trade this way, get bigger targets. So we're still going for a target. If we just draw our box, we still want an 8 tick target. So if I draw a box here, these divisions here are 4 ticks each. If I put that on here, that's where I want my target to go. So you can see I've got a 10 tick target. I can actually have an 11 tick target now. So the target is still in exactly the same place, but the other awesome thing here is that now my stop loss is down here, 1, 2, and if we measure that compared to before, we had a 16 tick stop loss. We now have a 13 tick stop loss, and we had an 8 tick target before. If we just measure that, we should have an 11 tick target. And you can see that. So this is a great way of trying to limit your risk and increase your target, but you're not actually increasing the target past where the pattern that you've practiced actually goes. So let's speed this up now. And watch how it works. Then we'll go back into our calculator and see what the difference is. Okay, so we've hit the target in exactly the same place we did before, but we've just got an entry which is 3 ticks better than we had before, because the market loves to pull back, and you can see it's done it on the previous 3 trades this day as well, that it's pulled back 4. That looks like it's pulled back more than 4 on this one. Just measure it. Yeah, you can see that's pulled back 6 ticks before it's actually gone through to its target. Once again, you will get less trades doing this, but your risk-reward ratio will be much better. So let's cross back to the calculator now and have a look and see how that panned out. So here we are back on the calculator. Hopefully you can see the difference this is going to make is going to be quite dramatic. So if we take our stop loss from 16 back to 13, and we take our average target now up to 11, we can see that before we were actually losing money here. Now it's done a complete turnaround. So just in case you forgot what those numbers were, let's go back to 16, back to 8. You can see that is a negative number, negative $700 over 25 trades. Pull it back to 13, increase our target, and suddenly we're in profit. So now if we were trading up at only 65% success rate, you can see we're starting to amount some very serious profit at the end of each month. Once we get really good at it and get our accounts grown, we can ramp up our contracts, and only 4 or 5 contracts, you can see that's turning into a very serious income for the month. So it's definitely worth putting the time and effort into learning how to actually do this, because it does have a hugely significant effect on your trading account. So one last thing I just want to check, we're going to go back to the charts again. I just want to make sure that everybody understands the 2 different types of orders. When you're in simulation mode, or Live Market Replay, NinjaTrader doesn't really mind which one you use. It seems to just let both of them work. So let's whip back into the charts and we'll just cover those orders and the different types of orders once again. So here we are back in the charts again. We just have a look, the candle is about to close. Now we're looking at the sort of order that we want. When we did the first trade, we used a buy stop limit order. Now that means that we put the buy stop limit order above the market. You can see it's well above the market here because you don't want the market to suddenly lurch up and grab your order. We then want to grab the order, bring it down, and as the market's closing, we have to put it one tick ahead of the market. So let's just wait for the extra few seconds. What that means is that the market must push up in that direction through the actual order. NinjaTrader, when it's running in Live Market Replay or in sim mode, doesn't really care. You can drop it anywhere, and as long as the market's there, if I dropped it right there, it would take it straight away. If you try to do that live, it won't allow you to. So what I want to do is get on the close of this candle, which is right there, and drop it. Then it comes up and picks me up on the way back through. So that's that way of doing it. If you want to be able to get a cheeky fill, however, you can't use that order because you'll find that it'll just put you directly into the market instead of what you're actually looking for. So let's just go backwards and redo that again, only this time we'll use the other way of getting in. Here we are back again, 20 seconds to go. So this time we want to be able to pull back. So we're going to go underneath the market. I want a wee bit more room, so I'll slide that up. Come down here, and we're looking for the buy limit. We're coming underneath. You notice it's a different color as well. So what that means is that the market has to now push down in this direction to hit where it is. So we're just going to grab this here now, 1, 2, 3 ticks under the market, and we wait for the market to push down into that order. It's good to be able to practice this even when you are in sim. Even though NinjaTrader does work when you're in replay or sim mode, it's much better to practice it the way that you're going to have to do it live. And here we go now. It pushes back into it and we get filled. That's all for this video, traders. I hope you found it helpful.